Dollar index, still holding strong, got support. Oh, and guys, we got 1 minute to go, so let me not miss key economic data dropping here. Core PCE is coming out in the next 40 seconds or so. I'm going to switch over to our all markets view. If you guys could do me a big favor, hit the thumbs up button on the stream if you're enjoying it. It does help just to support the YouTube channel here and keep these shows coming every single day for free. That is our goal, is to spread value, offer value to the trading community every day. Okay, we got about 20 seconds to go, guys. We'll go ahead and roll our breaking news. And if you wonder why we do the breaking news thing, it's because it's cool. Okay, coming out here in the next 5 seconds or so, we should get core PCE, some inflation reads. Let's see what we get today. All right, nothing just yet. Dollar index pretty unchanged. Okay, and core PCE came in line on a month-over-month basis. Can somebody give me the year-over-year number if you have it? Okay, S&P 500 not really making any moves. I mean, dollar index snapped a little bit to the upside, but really, really unchanged for the most part. Anybody have the year-over-year number? I should have just pulled it up, but 2.8. Okay, 2.8. So really not a big surprise, not a big mover there. PCE numbers are out and markets are pretty unchanged. You can see for the day, stocks have trended up across the board here. Russell looking really strong this morning and actually liking this news, it seems. Then meanwhile, you have the dollar index pretty unchanged here, has been also kind of making a move higher. Gold, probably, in my opinion, still free to journey into new fresh highs here. Oil bouncing. Bitcoin shy of 105. Okay, let's take a look now at that gold price action. Let's see what's happening here. Here's your 5-minute chart. Look at that gold rushing through the highs. And gold looks, oh man, gold looks really good. To be honest, though, I'm still going to stick to my system. You guys know I'm an adamant believer in my 3-part system. I actually think I'm going to do a full start to finish game plan reveal of my system and strategy. I want to make a video. It's probably going to be like a 1 hour plus length video. But the system itself is really straightforward. Now, in the 1 hour session, I'm going to go in as much detail as I possibly can with my trading system. A big thing on my channel is I don't have any secrets. I don't have any, oh, I secretly do this strategy. I stay as transparent as I can. I show you guys my brokerage reports. I also show you my entire trading strategy start to finish. Now, there's a kicker. There is a sales pitch in my trading strategy because, you know, I use a system that is core to the strategy, the Edge Finder, which is a product that we sell. So transparently, I will always tell you when when I've got something to sell to you. The Edge Finder is a remarkable tool that I think is worth every penny. But there's a 3-part system to what I do. There's the why, and I've said this many times. So if you've heard this before, I apologize. We're going to repeat ourselves here a little bit, but there's 3 parts, okay? How much? Here's the 3 parts.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Why do I want to buy a certain asset? And I want to ask everybody let's do a thought experiment. think through this with me. Ask yourself the same questions. You may not use the same system as me. You may not use the same strategy as me. That's totally fine. But these questions, you should have answers prepared. Okay? So let's do a thought experiment. It's Friday. Let's set up 2025 to be a good year. How do you do that? You plan. So 3 parts, 3 components. Why do I want to buy Bitcoin? Why do I want to sell pound yen? Why do I want to buy oil? Why do I want to sell Aussie dollar? Why do I want to buy those things? And the answer to the why for me is not, oh, well, it's trading above a moving average, or, oh, it's hitting a support level, or it just broke this key support level and now it's selling off. Like, those are, to me, all answers to the when component of this. When do I want to take an action in the market is different than why do I want to buy something. The better question to ask yourself, especially if you are more interested in fundamental analysis and understanding the real forces behind the market. Why does something have value, or why does something lack value? Those are the questions you need to ask yourself. Why does the dollar have more value than the Australian dollar? Why is that? Once you understand the why, the rest can be sorted out. But most traders, in my opinion, completely skipped this part. They just go, when do I buy it? When do I sell it? When's the best entry? What's the best pattern to trade so I never have drawdown? Like, that is what most traders jump to, is they just say, when do I buy it? When do I sell it? Like, when's timing, entries. That's what most, like, we can all probably recognize. Like, that's the you know, appeal in trading world is like, you look up YouTube and it's like best entry strategy, best, timings for buys and sells. Like, that's what sells to people. That's what makes sense to the average newcomer to trading. They don't look into why does something have value and why should it continue trending and why should it, like, be skeptical. Why should something trend the way it's trending? Is that valid? If it's not, we don't want to touch it, right? If something is trending up, but it doesn't have a good why, doesn't have a good value read, we need to be careful with that, right? So why for me comes from the fundamental analysis component of my trading strategy, which I use the Edge Finder as my systematic approach to that. So I am looking at a collection, a list of economic data, technical and sentiment readings in the markets to generate a list of bullish assets and a list of bearish assets. So part 1 to my trading strategy is the why do I think something has value or not. The step 2 is like the simplest part of the 3-step process, which is the technical analysis. So if I believe gold has more upside coming based on the fundamental reads that I just did on the Edge Finder, what I might look for is something like this. Very simple. Everybody here gets that. Technicals are easy, in my opinion. So technical analysis doesn't have to be made complicated. Big break, looking for retests of support, looking for continuation, right? That's a simple concept. I also have a method of trailing stops for trades that I like. Basically, I'm not going to go into that today because that would take me another 15 minutes to explain, but I have a very simple technical analysis approach. And then finally, going back to our 3-part process, how much do I want to buy of something? How do I protect myself? This is playing defense. Because even if this is a good setup, I don't want to be an idiot and risk too much, right? So how much is very key to the conversation. Do I want to buy, how much exposure? What is my correlation here already? Do I already have a bunch of metals plays? If I already have a bunch of metals plays, I may not want to add a bunch to this one. So how much do I want to buy of gold? So for everybody listening, whatever you use in your strategy, I want you to just think about those 3 questions. Why do you want to buy or sell something? Do you have a system for that? If you do not have a system for that, I would encourage you to look into one, whether it be the Edge Finder or something else. You should have a systematic reason for why you trade something. And in my opinion, especially if you take this stuff seriously and you want to be a fundamentalist, it means your why should have nothing to do with a technical chart. It should have everything to do with the macro, with what's happening in the economies of the world, monetary policy. That stuff should drive why you buy or sell something. You know, why should you think that Bitcoin has more upside coming? Or why do you think the Australian dollar should continue to be weak against the US dollar? A technical chart is looking backwards. Fundamentals, in my opinion, is looking more forward. That's why we focus. That's why we look at this stuff day in, day out. We're looking at the forward-looking stuff, not the rear view mirror.
But during the week, I was buying a US 30, a NASDAQ, and also S&P 500. So it seems like DeepSeek stories or surprise seems to be trying to fade away. But yeah, for now, I was like out of the market waiting for PCE, even though there was nothing, no change on that. So now we're just waiting for the market to do its thing.
Yeah, no, and again, your comment about the DeepSeek stuff. Yeah, it was a freak out in the Monday trading, but very quickly buyers came in, just kind of showing the resiliency of this market. Very quickly finding an opportunity to buy the dip, and it does seem like we are, at least for now, looks very likely that we could be heading back to test those all-time highs. And just to for index traders. Like Kenzo and myself, we trade them pretty heavily. If we take a look at just a bit of a around the room kind of, if you will, we had Microsoft, which was a little bit of a disappointment on their earnings, but a lot of other companies really pulled through. Meta jumped higher. You also had Tesla have a pretty good overall report. And then yesterday with Apple trading after the bell higher by 4.2%. So bit of a strong push higher for Apple. And this is, of course, helping out the indices. You've got NASDAQ up 0.9%, 0.6. So Kenzo, you mentioned that you're flat right now in terms of positioning. You don't have any open positions. Are you still bullish on the indices? And if so, where would you look for entries? What would kind of get you interested in taking positions? And are you looking at Dow, NASDAQ, S&P?
Yeah, on indices, I'm actually still bullish, but I think we are heading towards our highest level where we can get the resistance. Unfortunately, I can't share my screen. So, but I think we're heading towards that resistance on both of them. So which means I have to wait a little bit because I'm already out. I can't enter where the market is. So, but with the DeepSeek actually coming in, it's a bit surprising because I don't know if maybe that sell-off it's done or everyone is still digesting that. But it seems like the companies are doing great. But I think I'm hoping for maybe a better sell-off because at the moment, I think we're not actually at the right area for me to say maybe I can jump in. I'm expecting to see enough sell-offs, even though I'm still expecting to see a continuation of a buy, but I'm still expecting to see maybe a smaller sell-off, especially once we reach that higher level. Unless if maybe we get the breakout. If the market breaks out of that, yes, I can change my mind and say, you know what, maybe investors don't really care much about DeepSeek, then I can continue.
Yeah, so no, that makes good sense. If you're looking at a breakout through those highs, that could be pretty big. If you get something like this, perhaps a breakout retest. That also seems like a pretty prevalent idea when we look at the Dow Jones, right? You've got a big level of resistance here at 45,000. If you get the breakout on Dow Jones, this one looks really strong here recently, but perhaps there's a little bit of a pullback that happens before then, right? We've had some pretty good runs on some of the indices, so would be completely normal to see some, downside pullbacks in the meantime. But of the three, NAS, S&P, and Dow Jones, which one do you have your eye on the most? Are you looking at Dow or which one?
Mostly it's going to be NASDAQ. If I can go back on the DeepSeek thing or AI, since it's an open source, I think it's going to give other companies a break to join or to jump in, because they can actually distill that and use it as soon as possible or with some lower budget. So it means if they do that, obviously tech companies, they will be going in on that AI. So most of them, it's not really a bad thing. Yes, it's a bad thing because before it seems like you need to have more to invest on AI, but now it seems much cheaper. It means everyone can actually jump in. So which means we're gonna see enough companies participating in AI, and that will mean more sales, more activities, and I think Nasdaq will actually continue to go higher. I think maybe that is the reason why we don't really see those crazy sell-off. I already saw Microsoft added the DeepSeek R1 on their as a platform, so that shows that they can actually adapt very quick. So other companies, they will actually do that. I saw OpenAI, I think they made other model for free, also Microsoft. So it shows us that the more we see that competition, mostly we're going to see most of those AI becoming way too cheaper. At the same time, it's good for other companies to join in, the ones which did not really have that budget. So which means now we're going to see enough activities, not only from one side, but actually from both sides. And that is actually good because we are going to see enough competition, and that it's good for Nasdaq. I think we're going to see some enough push. I think that is actually a good news in other words.
Yeah, I actually agree, Kenzo, because the other thing too is that many companies, at the expense of some of the chip companies, like for example Nvidia, etc., many of the other companies potentially benefit from the increased competition in the large language model and AI stuff, because again, competition. Yesterday, and I made the comparison on stream to like flat screen TVs. Many years ago, flat screen TVs were unaffordable. They were super expensive, so the average person couldn't have one. Now, everybody can have a flat screen. It's much more affordable to more people to have a TV, a nicer TV for less money. Those things used to cost like $1,200, $1,300, $1,500. And now you can get a decent flat screen for $300 or whatever. So there is some increased accessibility to a technology can actually create more demand for it because there's more affordability. And so then there's companies like, for example, Meta, which greatly benefit from more cheap AI accessibility. And then there's the argument that even the average company could benefit from increased access. And then there's companies like cybersecurity companies like Palo Alto, which has run off of this. So many companies actually loved that news in a weird way. More competition means better pricing for AI accessibility to the average company. And there's a bullish take to be had there that I think the market kind of figured out and started to rally back on. The other thing is, somebody was mentioning, a couple people in the chat talking about how with the NASDAQ, it's concentrated to just a couple big tech companies. And that is true. You have like Microsoft, Amazon, Apple, Nvidia, Google, Tesla, like those companies concentrated make up most of the NASDAQ's returns. But I do want to offer you one thing to think about. What is Google? What is Microsoft? These companies sound like one company, but what you may not realize about these companies, they are actually thousands of companies in one. Because what does Google do with all the money that it makes? What does Microsoft do with all the money that it makes? They buy competitors and upcoming technologies. These companies are conglomerate tech indices by themselves, in my opinion. Microsoft buys out many different studios that do specific work. They buy out and they build their own stuff. So, just something to think about. Yes, NASDAQ is concentrated to a couple names, but those couple names embody thousands of smaller companies that have been added into their books. Would you agree with that, Kenzo? Does that make sense?
Yes, actually, you can say that Max 7 by themselves, they can actually make NASDAQ. If we start to split what they own, only, let's say Microsoft, they have like more than maybe 20 companies under their brand. Alphabet, they also have more than 20 maybe, because it's YouTube, it's Google, it's Gmails, cloud, whatever. So all those are actually different enterprises, and they also have their targets. So which means they have their yearly earnings targets, but they all combine them and release as one, but they actually different companies inside. So if it's Microsoft, you're also talking about Xbox, you're talking about so many things. I can't count all of them. But when you check,
Activision was
only
another big
Xbox
purchase.
is way too bigger than some of the companies.
Yeah.
We have Office, there's so many. So obviously, we can't count all of them. So that's why there are $1 trillion companies. I think maybe 2 or 3 now. So yeah, they are big enough. That's why we say it's Magnificent Seven. And mostly when they release, or when we have the reports, mostly they are very important, because we know that they are covering a lot of stuff, and mostly they are international companies. So it's not really about US only. We're talking about Europe. We're actually everywhere. So yeah, I agree on that.
There's unprecedented concentration in just a couple company names in the S&P 500 and the NASDAQ, but they are also some of the most exceptional earnings producing machines that we've ever seen in market history. So, there's a bull and bear way of looking at things. You can say, oh, it's all concentrated, but well, it's concentrated, but these are way more profitable entities than in the 2001 tech bubble. Microsoft and Apple and those things are just ATMs. They just print money, and they use that money to buy more companies. That's why they're getting so big. So anyways, I also wanted to just discuss here something as well. So this morning and yesterday, Kenzo, we had some interesting stuff on the economic data front. This new tab is called the US Economic Heat Map. And all it does for us, Kenzo, is it shows us all of the key US economic data to give us an idea of how things are looking across the economy. And what we see here is that if something is blue, it favors risk on. And if something is red, it favors more risk off. And what I like to look at is just overall, is there more blue or is there more red? If there's more blue, I'm going to continue to be more oriented towards risk on or bullish. And if it's more red, then more oriented towards gold and selling stocks and things like that. So the reason I point this out is take a look at GDP growth. So yesterday we had GDP that was a little bit weak, but today PCE numbers just updated here, came in flat to expectations. So not a big change. So we wouldn't count that as a win or a loss here, but most of our indicators here continue to show bullish outlook for the US economy. PMI is looking solid, right? So we also have retail sales, a little bit of a miss, GDP a miss, but then inflation readings, core CPI last time around came in light. That was a really good thing for the market. PPI came in light compared to forecasts, and that's what we're looking at is the actual versus forecast here. We also had strong jobs data. Unemployment claims this week were also solid. So you have JOLTS also stronger than expected in recent reporting. So this is kind of your cheat sheet for economic data. But the reason I talk about this, Kenzo, is that, people are trying to figure out, hey, at what point do I start selling stocks or shorting indices? And to me, you'd have to wait for this to light up red.
US dollar continues to climb higher after rejecting the 107 area. It was actually 107.1, roughly, give or take. So my thesis on US dollar bullishness continues. I'm not really concerned at the moment. I think it's quite reasonable to expect 110 to get tested again. 110 is a big psychological level. And given the current economics and the way the US dollar is going, I think it's quite a reasonable target to have. The yen is slowing down again, as expected. We've discussed the yen quite a lot this week. And I've been saying, I just don't know if this move is sustainable. Because if we look on just a wider scope on just technicals, it is just a lower high. We've not broken anything. It's not really any sort of significant move. We saw some sort of bullish pressure really come from the Bank of Japan rate hike, but you know, it's not looking like they're going to hike rates again. It's actually projected they're going to hold rates on the next meeting. So I am still more of a bear on the yen for now. Of course, we do have quite a high likelihood of an intervention coming. So that's another factor that could be beneficial. Lauder, Royal Trades, Lee, Bashi, hello guys, good to see you all again for some of you. The pound and the euro continuing to decline, which is nice. I took a very small position on euro dollar today. I think I made about £10, so that's my lunch paid for. Also, well, actually, I'm lying. I'm not in this position, which is a shame. I sent it out to my Discord. It was a signal, but I couldn't take it because I was moving capital to a different broker. So I'm sat on the sidelines watching this one go. But so far, so good. We entered very typical entry. If you guys watch the way I trade at all, you'll know that this is a very nice level of structure through here. We had the break, entered short on the retest, and now we're just sitting watching it come to the downside as we see continued pressure on dollar crosses. We did reduce the stop loss by 50% ahead of FOMC just to be safe, so all good there. Not really too much in terms of new positions. The Nasdaq trade I showed yesterday was stopped out, unfortunately. Dollar Swiss is continuing to run, and we do have a new position over here, which I am not going to tell you what it is because it's still at entry. You will have to pay me for that information. Capitalism. Gold continuing to climb higher here, currently at all-time highs actually, which is beautiful. Unfortunately, I'm a little bit upset that I've missed this whole run, but I just couldn't find a valid entry. So I'll forgive myself a little bit, but it's quite sad to see. We can have a look at dollar ZAR for sure. Can we get Mamba FX on here? I'm sure that would be quite a good traffic driver for the stream actually. So dollar ZAR, I don't trade this this pair actually, but we can have a look. I was short for a very quick period of time. Hold on, let me just pull up the Edge Finder. I need to see if there's anything on there regarding this. Let's see. Excuse me. I don't see dollar ZAR on here. Oh, it is. So we're getting a bullish reading on dollar ZAR with a +5. So it's just up from neutral. So it's nothing overwhelming, but it does help to give us a bias. The daily looks very bullish actually. So we've got very typical uptrend here. We've got the low, higher low, higher low, higher low, higher high, higher high. So the trend is pretty much perfect. Actually, you couldn't really ask for much of a cleaner trend to the upside. So I would be looking for a continuation. In terms of an entry, let's just see. The H4 looks a little bit weak here. We are seeing some wicks to the upside. So let's... There's not really a fib that works here. I would be looking to go long, possibly just on the next pullback, wherever that may be. Just buy within this previous low area, somewhere along here. Stop loss below the previous H4 low at 18.31. And let it run possibly just back to the previous high for a 1 to 2.8 at 19.19. I think that looks like a pretty solid trade. Again, it's not something I trade often, in fact ever, so I don't really know the behavior of the market, but yeah, just based on what I see, this looks fine. It's okay, James. Short is massive move down, coming to the downside. Maybe. I mean, I wouldn't be upset about that, to be honest. That is true, Ballout. We do. It's good to disagree and agree on things. That's why trading floors are very diverse. Sean, we're not sticking with that name. We already established this. Yeah, a weak pound is fine in my view. It's still overpriced from where it should be. This country is an absolute mess, so I'm happy to see it continue to fall. So yeah, I think in terms of pound crosses, specifically pound dollar, we're pretty much set to continue down. The fear around the pound seems to have decreased a little bit. I actually got a headline this morning from Bloomberg saying investors or traders are now pricing in an extra rate cut. I think it was an extra rate cut. I can't remember what it was. Just let me double check so I don't give you false information. Traders have also added to their bets for Bank of England rate cuts this year, now fully pricing in 3/4 point reductions in 2025. So that is traders expecting 3 25 basis point cuts by the Bank of England. So that's something to keep in mind. So that will be adding some pressure onto the pound. However, overall, it's actually quite a positive sign for long-term economic recovery. But I'm still not very happy with it. Oh, you have family in Kent? Kent's lovely, actually. Yeah, I like Kent, but at least they're not in. In fact, I'm not going to say. But there's certain places in the UK where you don't want to go. So let's move on. Euro yen shorts are still valid, in my opinion, even though I'm pretty bearish on the yen. I wouldn't really want to go long, and to be honest, with the likelihood of an intervention, a little gamble on euro yen, in my opinion, might come at some point. Very low risk, of course. Isn't, as always, not financial advice. This isn't a signal. However, if we can see some sort of climb up, and we can also see dollar yen hit 160 or slightly above 162, 163, I might go in for a little bit of a gamble trade and just see if I can catch an intervention. But again, let me just clarify that is just a gamble. I don't endorse that type of behavior. James, the only way the UK can be saved is by Bruv movement and Andrew Tate. Oh, Bruv movement. Yeah, I mean, Andrew Tate and Tristan Tate just got a $2.1 million tax bill from HMRC, so I'm not sure really how that would go. I think the only situation I would actually like them to come here is if they would abolish HMRC and restructure. The HMRC is just robbery.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.